Every time I see you, you make my heart say.
Hey guys, welcome to my channel and welcome to another video. I'm sitting here preparing to do a video and am going to do a video while I'm preparing to do a video. The video that I'm preparing to do is one just showing you guys what I use for my videos that I'm currently doing. I do not have a camera dedicated to videos. I do use my phone. So I'm going to go over the things that I have and the things that I do. But I need one of these, I need a wall block for my camera in order to do what I'm trying to do, so I can tell y'all what I do. I know y'all like, what is this fool talking about? Oh, I found one. I needed a wall block so that I can plug up my ring light. Anyway, I wanted to do a video real quick about buying a house with Section 8. Let me just first start out by saying I'm not currently on Section 8, but I have family members who still work for Section 8. I have had Section 8 3 to 4 times in my lifetime. I had it the first time when I first got out. No, I stayed in low-income housing when I first got out the military. I was pregnant and had one child. I stayed in there until my unemployment came through. Then they booted my black behind out of there. Then I got it again when I moved to Florida. When I left Florida, I moved to Georgia. I lost it. I went back to Arkansas, got it again back there. When I got it, I immediately ported it back to Georgia. So that was the second time I had Section 8, and I had low-income housing once, and that was my second time getting on Section 8. I stayed on it for several years. Lost it again, missed an appointment or something. I don't know what the heck happened. But anyway, I lost it again. And then I got it back through the VA. The VA has their own Section 8 program. I got it back through the VA. So with all of that, not to mention having family members that work for Department of Housing and Urban Development, I've learned a lot. And, you know, if I need to know anything extra, I can call them and ask them. I want to first off say this. You cannot buy a house with a Section 8 voucher. Even as far back as 10 years ago, you couldn't even rent from a relative. So if you, like people, I remember at one time people would try to get a house. It would be in their name, but they would say it belongs to a family member, and then the family member would rent it to them. You cannot rent from a relative. You cannot rent from anybody that you know. And you cannot use, because they have to have a lot of paperwork that proves the ownership of the home and a lot of details about the home. So it will be very easily seen that it's your house. So if you own a house, they will tell you before they will give you the voucher, you have to liquidate that and then go and use that to house yourself. Once that money is out, then at that point, they will consider you eligible again, depending on the rest of your income. Now, I see a lot of videos that people do. I've even seen Peach do one saying that you can buy a house with Section 8. You cannot. That's not true. However, I did watch Peach's. Now, I didn't watch any of the other ones. I watched Peach's. And basically what she was saying is that the Housing and Urban Development Department has programs to help you purchase. That is very true. But I guess, you know, it was clickbait to get people to click, which worked. So, but they have a program called NACA. As a matter of fact, the young lady, as recent as a month or so ago just made her purchase with NACA. She went through the entire process. They started her from the initial appointment. They went through and helped her with credit. They helped her with everything. NACA. That is a program that is currently still in place. There's another one. I know the state of Georgia had one called SHIP. Now, what the acronym actually means, I don't remember. I'm just going to be honest. But that SHIP program was independent to Georgia. Every state will have a program. So when you go into the housing office, you can ask them, do you guys have any programs that help with purchasing a house? Now, the most famous one I know of is Habitat for Humanity. You can apply for that. It's not really based on your credit, but your credit has to look a certain way. Like you can't have late, you can't have this, you can't have that. So to qualify, you're still going to have somewhat decent credit. So, I mean, that's just kind of how that is. So you can definitely check that to see, how that program is working in your area. Another thing about that is that's probably the best program out, because if you buy a house that's $100,000, you're going to pay $100,000 plus your closing costs. They do not charge you interest on the loan. They just want you to pay, give them their money back. You're going to put in so many hours, I think 1,000 hours into help building the house. So that's going to save you money right there. And I guess that's where the interest comes in. That's how they make up for not charging interest and are able to run the program, because they still have to pay the people that run it. A lot of people in the city sit on the boards, important people in the city, and they make the decisions. For example, where I'm from, I have family on the board. My mom used to be on the board. She not no more, but she was. My people are pretty important where they are. But anyway, but it just is what it is. Like that's one of the best programs out there. Also, they got the best doggone mortgages. My cousin had a 4-bedroom, 2-bath house on Habitat, and her mortgage was $375. I ain't never paid that in rent even 20 years ago when I got my first place, and it was a trailer because I was in the military, and I still paid more than that. I think the least I've ever paid for rent was $500. So, and she had a 4-bedroom, 2-bath. Baby, as they say in the country, she was shitting in tall cotton with that deal there. Yeah. But I just wanted to speak on this. Another thing, if you are looking or wanting to purchase a home, another great program to use if you don't want to wait to conform to any of these other programs is the FHA program. Try to finance with FHA. You go find you a loan officer. Your credit scores need to be between 525 and up for FHA. Let me explain the difference though. If you have a score of 525 to 575, FHA will finance your house, but you're going to put 10% down. So if it's a $100,000 house, you're going to put 10% down. You have to have no late pays. Your credit has to be completely clear, not clean, but clear. Like you can't have anything bad in the last 2 years. Your housing cannot be over 43. Your total debt to income ratio cannot be over 43%. Now, it used to be 29.41 when I was a loan officer. So your housing DTI had to be 29% of your overall income, and your overall debt to including the house had to be 41. Now they give you to 43, which means 57% of if you make $1,000 a month, your total debt a month can be $430, and your discretionary income, which means your free money, will have to be the $570. That's how that's set up. Obviously, $1,000 is not buying you much house. So if you are that low, unless you build pretty much getting you a shack, yeah, you might not even want to mess with them people. No. But You can't have any bad checks for the last 2 months. You can't have anything negative for the last 2 months. And you can't go out and buy, like I said, your overall debt to income cannot exceed 43%. Now, they will let you have, I think, up to 1 30-day late on your rental in the last year. If you go over that, then that disqualifies you from the program. So that's pretty much, if you meet all of those guidelines, you're pretty good as far as buying. But you got to have that down payment. Number 2, if your credit score is a 575 or higher, they will finance you. All the same rules apply, except one is different. The one that's different is that your down payment is not 10%. It is 3%. So 97% can be financed, 3% you have to bring to the closing. So that's the only difference. Now, depending on what lender you use, they could have other qualifications that they require. For example, I remember way back when I was doing loans, one bank still required a 600 credit score. They didn't care. That's what that bank required. So they had to follow FHA guidelines and then bank guidelines. So it just really depends on where you go. So you kind of have to find out the underwriting guidelines yourself before you go starting to let them pull your credit. But 9 times out of 10, they're going to follow the general FHA guidelines, because FHA really is a fair housing loan that is certified by the government, and they're not supposed to discriminate based on race, creed, color, credit, sexual origin, anything of that nature. So they're not supposed to be able to have those kind of qualifications. So I just want to, like I said, briefly speak on that. These are the updates that I have. If you have any direct questions about this, please ask me below. I will definitely help you. If there's anything else that I can help you with, I definitely will. But it's pretty simple. If you just take care of your credit. Now, as of July of 2022, they're not supposed to have medical bills on your credit report anymore. So that may help. But then the other downside of that is, on the same token, they have added these buy now, pay laters to your credit. So it's screwing everybody up too. Also, certain banks report the checking balances to the bank. And if your checking account shows as negative, or if your checking account shows a certain amount, like let's say under $500, they may penalize you for that on your credit, depending on how the credit is calculated. So they are doing everything they can to try to keep a divide, the people with money and the people who don't, because they are finding ways to quietly discriminate against you, and it's unfortunate. So what you have to do is just know what's going on out there and prepare yourself the best you can for what is out there. So that is pretty much the general basis of what's going on. Like I said, if you have any direct questions or anything I can clear up, please do not hesitate to contact me below. And we can also talk below. If you just have any input on that, just let me know. I will definitely see you in the next video. Now, there's another way that you can become a homeowner. I don't know if a lot of them do it, but let's say, for instance, you live in a neighborhood and it's a builder building homes in a neighborhood. And he has several houses, or either his houses aren't selling fast, or he has several houses that are just sitting. Sometime a builder will finance you for 1 to 2 years to get into a home. You would pay him a certain amount of money. You'd pay him, and then after that 1 to 2 years, which is just him giving you time to get your credit ready for a bank loan, he'll have a balloon payment at the end, which is just basically you refinancing into a more conventional long-term loan. That's happened a lot of times. I know a lot of people, especially in the Atlanta area, that has become homeowners like that. It was a house that was sitting. It could have been a model house. It could have been anything, but whatever the case was, the house set to the point that the builder was like ready to move to his next project. So he chose to do it like that. So what he probably did is put that loan So, did the builder financed loan and then took that home because he was on the deed as well as the owner probably, and got money against it, used that money to go ahead and start working on his next project. So that's another way to do it as well. Okay, well, guys, that's about all I have for you today. Like I said, if you have any questions, you can ask below. And if you are new here, please subscribe, like, and comment. Just let me know how you are liking the content. And I will see you in the next video. Bye-bye.
Every time I see